Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, but this time we're going to be taking a look at the Wyckoff distribution schematic and whether or not this is a good fit for what is going on right now for Bitcoin. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is down in the description below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video and we'll just jump straight into the daily and take a look at the schematics here for the Wyckoff distribution. Yeah, let's take a look. So Bitcoin, USDT pairing, and this is Binance as our data source. So there are two schematics when it comes to the Wyckoff distribution in the same way that there are two schematics for the Wyckoff accumulation. The main differences are essentially this area just up here. Not that you guys can see that because I'm drawing on it with white, but basically the UTAD test. And up here, it's labeled up on schematic number 2 as LPSY. Other than that, the schematic is the same. The idea here is that this is a pattern of manipulation that basically allows you to kind of move the price in whatever direction has the most amount of liquidity. We talk about liquidity quite a bit on the channel. Essentially, wherever the money is, the price will move in that direction. So they'll be able to liquidate whatever way is going to be the most profitable. Okay, so what we want to do is we want to track to see whether or not we are on track for these schematics. Okay, so are we actually tracking a Wyckoff accumulation pattern or not? So as we kind of jump down into this, we'll just try to bring these in a little ways, make this as big as we can and bring this in. Okay, so for the most part, we are on this journey to the upside. We don't have to worry about option 1 or option 2 here. We can just use one of these for now. So I'm just going to go and park that one out of the way there because they both start exactly the same way. Okay, so here we go. So we can see here that we've had this initial surge to the upside. And we did see a couple of breaks downwards here. So to me, this looks like we are... Yeah, I would say this is our UT and this is our UTAD test. That would make the most amount of sense. That puts us at a BC here with a secondary test just here before going down a little bit lower than the most recent swing low, which was the automatic rally. So for the most part, I'd say that's kind of where we sit with this one. It would look to be approximately there. So let's go ahead and do some labels here. So let's grab my text. There we go. So I reckon here is our BC. Okay. I'm going to put that right on the top there. Then I think we have an AR being here. We'll pop that one in there like so. Then we would have... sorry, our automatic rally has to be down here. Then we have a secondary test, ST just up here. So we just throw that in there, capitalize it. So our secondary test is right here. We then come down to the SOW, which will be right down here. If I can get the right tool for the job, the SOW. Okay, cool. So that would be down here. Then, of course, we rallied up. So that basically puts us into this phase B area. So let's go ahead and draw a line right approximately here. And then I'll add some text down here for our phase B. Okay, so that's our phase B area, and everything else that kind of led before there would be phase A, like so. Okay, so that's our kind of moves to the upside. So far it's tracking reasonably well. Okay, we then had this move up here where we kind of have a UT. So that happens to be right on this most recent move to the high side. So that's coming in where we pierced above this swing high. And then, of course, we had the collapse down. Now, this is important because this move to the downside does not breach the automatic rally, which actually in this case it did. So that's going to be your first point of failure. Let's just check to make sure schematic number 2 is exactly the same. It is. So that's your first point of failure here on this kind of mapping of the distribution schematic. So let me draw that in, right? If our automatic rally is here, then we should not have breached that from the UT downwards, as you can kind of see here. Obviously, we stay above the SOW, which we do just about. but it does mean that this mapping is slightly off, okay? So in this particular case here, we'd have to then have this as the UT. We'd have to have the secondary test. See, and this is where it really starts to fail down, because then that have to be BC would have to be here. Our secondary test didn't happen. And so therefore it starts to kind of fall apart a bit. Okay, so any other way of looking at this would be that maybe our BC is here. But again, you don't have the secondary test that stays below the BC, the automatic rally. So I think that actually for the most part, since we kind of are tracking this and we start thinking about where everything is going, I think that we probably are not following the Wyckoff distribution pattern, because this move from the UT to the downside, I mean, unless of course this is all a run to the upside and, you know, we've only just hit the UT. I mean, I guess that's the only other way of trying to make it fit. If we really wanted to try and make something fit, that's how you would probably do it. So you'd have your BC, your AR, your ST, your SOW. Then we'd have the run upwards to the UT, skipping this high and skipping this low. And this is just part of this move to the upside here. And then you'd break on down from here, stay above our automatic rally at 26,942, and then have either a UTAD test, or you skip that test altogether and you continue the break to the downside. So there's one of two things to occur here. One, if we have got our UT up here, then our next moves are to come down towards $26,942 and stay above that range and have a bit of a bounce. Okay, so let's bring in schematic number 2 at this point here, because if we just delete that off there, we don't need that one. So if this is the case, then we would be looking to basically see either a new local high or a bounce rejection from the BC high, which if I put a line on would be 31,000, and then breaking on down all the way into some new or existing, testing the existing lows. Now, for the most part, if we are to follow the Wyckoff distribution pattern, then yeah, we are going to be looking at basically breaking down from where we are, right? If we are following this, I think it's loosely working. I don't think this is going to be something that actually kind of plays out overall, though. So I know a lot of people in the Discord server, link obviously down below if you haven't yet joined, have been asking for reviews on the Wyckoff distribution pattern, and we're just trying to make this kind of fit to see whether or not we have that kind of bullish idea, that bullish bearish narrative kind of forming in here for the distribution model. And, you know, it's really quite a tough one. I mean, I'm looking at this, I'm thinking to myself, you've got your probably PSY has to be over here. So PSY and just over on this side. And the only way to really kind of get this to work is you have a really tight ARST-SOW and a really strange UT. Otherwise, you'd really want your SOW to be down lower than your automatic rally, which you just don't have. And obviously your ST has to be lower than your BC. So this is the only way that you could kind of try to make this loosely work. But again, you know, we'll know more, I guess, over the next kind of week or so when we start to see what happens here. If we are to see a breakdown from the UT area here that we are right now, I still think we've got a little bit more of a push to the upside first. But if we were to see a bit of a breakdown from here, then the breakdown is going to have to stay above the automatic rally, which would put us right on this low point here. Okay, so you'd have to stay above that automatic rally, which would basically be 26,942, right? So you'd to move down from the UT down to this range, you'd have to find good support in this area, not breach it. Bounce on up, very, very short bounce, get rejected from $31,000, and then lose basically everything there under the schematic number 2. Of course, if you follow schematic number 1, then of course we rally on up and we breach the UT. and then we break on down in a really sharp way. Personally, I think there's a less likely scenario of schematic 1 and more likely a scenario for schematic 2, which basically would mean that you'd have a really short bounce to 31k, then break on down if we were to follow this model. Okay, so I think for the most part, there's a real loose way that we could apply the distribution schematic, but I just don't think it's really a good fit. We'll see whether that plays out over the next kind of couple of days or so, but for the most part, my expectations are that we probably are not following the Wyckoff schematic here for distribution. But let me know what your thoughts are in the comments below. I think I'm going to leave the video right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, I'll catch you all then.